Good morning, everybody. Friday, June 24th, so we made it. Like we usually do, we want to start first thing, taking a look at what's going on around the world, kind of get a feel for any story that's maybe beginning to wind up a little bit. We want to see who's on the agenda to talk. And Financial Juice does a reasonably decent job of this. It is set to my time zone, so these are not going to be accurate. I'm 1 hour behind the market. So here where it says daily's going to speak at 1500, 3 o'clock, it'd be 4 o'clock. All right. So you just got to look it up on your own time zone and it would probably make more sense. But you can see that we've got a lot of European central bankers that's been out there chipping their teeth today. This is why a lot of times we want to do this, right? We want to go in and see who's talking, what have they been saying. We also want to get into the idea that if you come over to Financial Juice, they'll have these market wrap. And if you were to scroll down, you could see the close of Asia markets and what sectors were doing good or were not doing good, either side of the fence, to kind of sort of get a gauge for where we might want to be looking. I noticed a little bit of talk about the technology sector. So nothing really standing out, but we at least want to come by and take a look, right? That's one of the big deals. Don't want to get caught sideways on that stuff. All right, so bring it over to Thinkorswim. Look at the market watch, consumer sentiment 10 a.m. and the new home sales at 10 a.m. That's it, really. I mean, the rig count, I've worked on drilling rigs for 20 years, and whether we have 176 or 180 rigs out there isn't going to really change much, especially when a lot of those rigs are just punching another hole into the same lake, right? It's kind of for a nice little visual. If there's this underground pocket of whatever you're going for, gas, oil, they may approach it from 90 different directions. We can trade directionally now. We can trade sideways and angled. So they may be just poking more straws into the same pocket, right? And a lot of times it's not going to drastically alter the price per barrel. I would say almost not at all. So the rig count very likely will not have any impact one way or the other. So once we are done at 10, we are done. Other than the Fed speakers, we should have a very clear afternoon to trade as we see fit without getting blindsided by economic events, economic news, right? All right, so what we're looking at this morning is an inside day breakout. We did finally get outside of that range. Now, the question is, are we going to keep it? The red line that you see there is half of the ADR, and it's just a little shy of this peak from a couple of Wednesdays back. That is a point of contention. We will have to resolve that spot. But when we go over and look at the volume profile, what we're very likely going to see is that it's nothing there that's going to concern us. But we'll check and make sure. So at the moment, let's talk about the possibility of a bullish day. Suppose that we keep this bullish sentiment through the morning and we come into the open with an inside day breakout. It is the potential for one of our 4 trend days. Any day, anytime, any market can have trend. And all we got to do is go to a small enough time frame. I can show you trend anywhere. But these very specific, very unique trend days, these very 4 exact kind of days, one of the criteria is that we are not inside of yesterday's price action. Check. We got that. All right. So the next thing that we want to see is that we really want to get outside of this Globex range. We don't want to be inside of this anymore. So if we get into the open and we are near the low of this Globex range here, then for this to be a trend day to the upside, we're going to have to reclaim all of that, get back above the Globex high, and then begin the trend. So we're up, about 0.75%. So getting that top side breakout, we would still be less than a 1%. And this market has the capacity to easily make its ADR move, which is 38.88. That should get us to lunch, right? And then, of course, we'd go into lunch, stabilize in a basing pattern, and then either flip it over and run it back to the open, or come out of the other side of lunch and continue an exaggerated move to the upside. Third possibility would be come out of lunch, run sideways into the close. So that's our bullish case. But what about the bearish case? So suppose we come into the open failing to get through and break higher than our current Globex high. And instead we start to fade back down. Got to pivot at 38.15, call it 38.11, really the cog line. You get through the cog line, you've got to pivot at yesterday's highest value, it's 38.05. Get through that to the Globex open, then to the Globex low, so 37.88, and then 37.81. Half the ADR is at 37.33. It's a significant move to the downside for us to get there. If we were looking for any other pivots in the middle, there'd be the Globex open or the close of the RTH from Wednesday. I suppose you could mark that as well. It's an institutional pivot point. Then you've got your RTH low of yesterday, also worth marking as a pivot point. So plenty of things to hit on the way down. The third scenario, it's always worth mentioning, even though I really honestly believe that this scenario would be the least out of the 3, is that we go sideways, because it's one of the 3 things that the market can do, right? Go up, go down, go sideways. So we're already up, near 0.75%. We could just stay right there in that range for the rest of the day. It doesn't owe us anything, right? So really want to kind of catch that. If they can say on Bloomberg and MSNBC and whatever, they can say out there that the market was up today 0.75%, it'll sound good, right? They'll be able to spread it all over the place. They'll say it over and over. They'll say it loud and often and as much as possible, that the market was up 0.75% today. And that's all that it needs for the rest of the day. So that is on the table as well. All right, so we're looking at the volume profile right now for a 10-day, 30-minute. We are outside the box. When we're outside the box, we expect to get back in the box. When we're at the high of the box, we expect to go down. When we're at the low of the box, we expect to go up. If we are outside of the box, we want to see which way price is going. Is it continuing to drive farther away from the box, or is it working its way back towards the box? It's a very narrow box at the moment. The point of control is 773. So it's underneath this near 50 points. And like I had mentioned that we would do, I want to talk about that pivot point from Wednesday, a few Wednesdays back, around that 38.50, 38.40 zone. Instinctively, we would want to snap a line there and say, oh, yeah, it's a pivot point. We draw a line, and when price gets there, we'll expect a reaction out of price. And it's very possible that we would see a very small reaction out of price. But there's no volume there. There's no old volume there, right? That's what we want to talk about. Could there be orders resting on the dome that would warn you or at least validate what you're seeing as we come into that level? Yes, absolutely. But that would be live, real order flow, as opposed to looking back or believing that this is in any way a valid pivot point just because we can reach back and draw a line there. That doesn't give it the credence to be anything, right? So don't give that one a lot of weight. If we come into that level, we are very likely going to move right through it as if it wasn't there at all. There's no volume structure there, right? Five-day, 5-minute chart. We don't have anything to carry forward that hasn't already been hit. I only carry forward the points of control. But if you were to study volume profile logic, they say that it is worthy to carry forward these value area low and high. I got enough pivots. I don't carry these forward, but you certainly could, which would leave the lower one down here untouched, and that would be one that you would want to carry forward. We've already tagged through the point of control, so it's no longer an untouched point of control. I wouldn't want to carry it, and the same with the value area high. I wouldn't want to carry that one forward either. Certainly you can, right? There's nothing that says that you couldn't. Just I don't. We don't have anything to map out on the 5x5. If you were to recognize a little bit of structure, perhaps we're still a long ways off from any of the angled lines. So not even really much work to carry forward on that. It is worth pointing out something that I was talking about last night in the chat. There is a trade that I really love to do that looks like a bearish trade. You get this market that has this pennant shape. And of course, a bear pennant or a bear flag is expected to be a continuation trade. Yet, because of that angled low side, right, or you're getting higher lows and higher lows and higher lows, and yet you're continuing to get an equal high, you start to build compression up. And what I have found with this is that you often get an upside breakout. You get a bear pennant that fails more than a bear pennant that continues. Now, maybe on the lower time frames, or maybe that bear pennant is a continuation anywhere else. But when I find it on the daily chart, I have found that it is a really good bullish signal, not a bearish one. I've traded it the most in Walmart. It seems like Walmart has that pattern. I've had 3 different bear pennant breakouts to the upside in Walmart in the last year. And we have one of those bear pennant with these higher lows forming this wedge and this compression. We have it right now. And we also have had multiple days in a row where we've been staying inside of this really big red candle. Now, the really big candle part is what sucks. If you're going to have an IX10 or an inside day, you would want it to be behind really small candles because it implies a lot more compression. Hiding behind or having price stay behind a very, very large candle does not imply that there is any sort of compression. But if we were to focus on the blue candle here from June 21st, or even this candle from June 22nd, it's been inside day, inside day, inside day, inside day. Each day getting smaller and smaller, each low getting higher and higher. We are winding up. We are building up energy. This is getting ready to pop. In my own experience is it pops to the upside. It doesn't owe us a pop to the upside. And in fact, it is a bearish pennant, so it technically should go down. But either way, the trade is in play. If it wasn't the S&P futures, if this was an equity market and I was mapping this out, my expectation would be a 4% move, because that's generally what I get on a move with this. And that's like a bare minimum number, you know? I mean, it feels pretty good to catch a Walmart when it moves 4% on a day, because Walmart doesn't normally move 4%. So it's a nice catch. Do consider this topside breakout today and where the pivots are at. 38.78 right now is an area of resistance worth keeping your eye on, because should we actually get above 38.33 and a quarter, that old resistance is very likely going to become our new support, and it will continue this run to the upside. In technical analysis, if we were to call timeout on that bear pennant and discuss the fact that we've been in this consistent and persistent move to the downside, with that white line in place, the swing high and the swing low becomes very obvious, almost like a Captain Obvious moment, right? Like, yeah, thanks. I think a Stevie Wonder could see that. Of course, for all you young people thinking, who's Stevie Wonder? Yeah, Google. Just Google. I ain't that old. So we have the swing low here. We have every expectation of making a swing high. 4,000, 4,500, or I should say 4,050, not 500, not way up here. We have every expectation of making that swing high because that's what price does, right? Same thing back here. Now, back when we had that Fed announcement, so we actually traveled a little farther than we normally would have, right? It went through the top side. Well, my drawing is junk. It went through the top side of that because we had fuel thrown on the fire from the Fed. So March 16, we had that. It was Wednesday. We get the blowout, had that exaggerated run, and price just went farther than it should have. But it still rolled itself over and continued the swing. We have the weekly expected move already. Now, it's not set in stone yet because the market is not closed, but we get that on Fridays. So there's next week's levels. One of the things that I do when I get next week's levels is I like to draw a box around them. Well, Buller's out there chipping his teeth. I like to put that box around it and then set it in our current environment and ask, what are they expecting for next week? More or less volatility? Less. So the volatility is going down. The market makers are not pricing in as much volatility for next week as they did this week. We are outside the box. It's worth noting. We will be talking about this indicator later today when I do my live stream. I'm going to be live streaming this afternoon at 1 o'clock. We're going to run some back tests on my weekly iron condor strategy. It's a mechanical strategy. It doesn't really require a lot of technical analysis. It's put on because all of the criteria has been met. I use this indicator a lot. Built 18 different strategies with this indicator in mind. I've been talking about it in the chat. So today at 1 o'clock, we're going to come in and put all that together. Well, we're going to start to put it together. I've got a lot of pieces to walk you guys through before we can just jump right into all of it. But we'll be moving in that direction, talking a little bit about expected move stuff and explaining how that indicator works so that we can get to the point of getting into those automatic mechanical trade systems. And it's just like what it sounds like. It's automatic. I mean, it's completely hands-free. It's almost the unicorn or that mythical creature that everybody talks about. The ability to trade options with very little amount of technical analysis required. Right? Isn't that the promise that drew most of the new traders to options in the first place? Is the idea that with very little skill and technical analysis, you can still lean on your probabilities. And that statistically, you'll be ahead of the game. You'll be able to trade effectively and profitably and consistently, which gives you time to get better at your technical analysis, right? And then, of course, the better you get at technical analysis, the better you get at trading. And it's just a circle that lifts you up more and more and more in your accounts at the same time. So these mechanical systems are key to a lot of what I do. And I haven't had them for a while. I miss them. I want them back. We haven't been able to use them effectively because they were all designed on a market with a 20-year backtest history. Well, we're in unprecedented market environments, so they don't work the way that they should. So thanks to Options Omega, where we can do intraday backtesting all the way down to a 1-minute time frame, we can figure out what new settings we need to use for the kind of market that we're in right now and put those mechanical systems back on again. Yes, yay. Super excited about it. All right, with the S&P up more than 0.5% and the NASDAQ up 0.75%, it doesn't take much imagination to imagine that most of the sectors are going to be up this morning. We want to really kind of focus on what isn't up this morning and are they a signal for anything. So the devil's metal, silver, is down this morning. Gold is basically flat. And one of the criteria that I use when I'm looking at the sectors is I want at least 0.5%. So if I see that something is up or that something is down, but it's not even 0.5%, it doesn't really fit what I'm looking for, right? So I tend to just consider that flat. They just did an update on, well, it wasn't just did an update, but they recently did an update on TrendSpider for more unusual options activity. Show you a picture of what this looks like. I think a lot of you will like this. So this is a picture taken of Walmart. You can use the slider for the expiration date. You can use the slider for how strict you want to get with the premium. That way it's not just firing alerts on really small amounts of premium. And then you can set the slider for what strikes you want to focus on. Because if you're, if you want to ignore those really far out of the money strikes, for an example, you could bring that in so that it's not triggering on that far out of the money stuff, which is often used as hedges and not as any kind of bullish play. So that's part of the trend spider tool on options, that it absolutely amazing. Then it has money at the strikes and the trades and the breakdown, right? So pretty cool. Trend Spider continues to grow as a company and provide more and more and more. I've been using them for a few years now, and they never stop. They just continue to find new ways to improve, new ways to add new products. I'm not running a commercial for these guys by any means, but there's a reason that I still have their product. There's a reason that I go back to it every day. So definitely worth checking out the tools in their sidebar, right? The widgets. All right, TLT is down this morning. And I didn't do it. I normally do, so we'll just go ahead and do that. Bring it over. I take a look at what's going on. I watch the market. Right? I don't just watch what I'm trading. I watch the market. Bitcoin, bonds, the dollar, the VIX, oil, the NASDAQ, the S&P. Notice the NASDAQ with this liquidation break here, and the S&P is not following up on it. Finance should definitely be on our agenda this morning. What's going on in the XLF? What's going on in the KRE? So the bonds are breaking down. The NASDAQ is down on that liquidation break right there, but we didn't really get that follow through in the S&P. But look at the dollar, right? Significant breakout of that channel that I had drawn. Somebody the other day called this a liquidation break out instead of a liquidation break, because normally we just say, a liquidation break, and that means down. Someone called this a liquidation breakout, and you know what? They're not wrong. I'd never heard it called that before, but it fits, right? So interesting new term, kind of something to think about. But using this grid and carrying this perspective of what's going on in the market, not just by what you're trying to trade, but by the collection of the perspective, really helps, right? It gives you that idea of what the heck is going on out there. And if something starts to stand out, something starts to do something odd or unique, they get your attention. It's a way to make more money, or at least at the very, very least, a way to protect yourself from losing money. Right. So consider, no matter what kind of trader you are or what you are trading, don't just sit there staring at that one chart. Right. Trading Facebook, don't just sit there staring at a Facebook chart. You're completely blind to the rest of the market, and you're going to get ripped up. And then you're not going to understand why the big move happened. Oh, I don't understand, why did it make that big move? You didn't see the bonds crashing or the dollar spiking or the VIX movement? No, I wasn't looking at any of that. I was just looking at Facebook. Analogy that I use is take the palm of your hand and put it on your nose. Can you see anything? No, you can't see anything except for what's right in front of you, what's on your nose. You're blind. It really looks like we're priming up for a nice little trade that I like. And the way this trade comes in is as we come into the open, we are gapped up, right? Like, thanks, Captain Obvious. I think we all noticed that we're gapped up. But what I like to see is that we are gapped up, but we're off that Globex high and preferably down in this area, so that as we come into the open, we get that bullish rip to the upside and all the kids jump on it like, yes, we're bullish. Rawr! Everybody starts buying calls and it rejects against that Globex high. It slams it right on their head and then it just runs to the downside all day. I'll be looking for that this morning as we come into the open. Which means that all of these names that are up that we were looking at on TrendSpider, all of these sectors that are up, if we were to make that head bump fake out and just start closing the gap today with that move to the downside, all of these are going to also begin moving to the downside. So we're talking about semiconductors, which has just been getting beat down, also has that really nice, it's got that really nice pennant. But this one doesn't have the same equal high setup as the other one. But we would be looking for all of these that are up this morning to start to give it all back if we get that rollover in the S&P and the NASDAQ. Notice that the VIX really isn't validating this breakdown that we started to see in the NASDAQ, and that it wasn't confirmed in the S&P. So we had that liquidation break in one of the indexes, but not the other. And there was no confirmation in the VIX. And it was bifurcated. It's been a while since we've had a bifurcated market. We've had a tightly correlated market lately. Emerging markets is up nearly 2%. This is our risk on gauge for global sentiment. Same with Bitcoin, which is up 1% this morning. It's actually up more than the S&P and the NASDAQ. Now, looking at the ETFs, SPY, the Qs, IWM. IWM is actually up more than the Qs, and SPY is up this morning. Right? And DIA is up the least, but it's still up there. Remember, keep your eye on finance. We didn't see the S&P respond to that move in the dollar the way that the NASDAQ responded to that move in the dollar. And if you remember how I started the stream when we were talking about what happened in Europe today, or what's going on in Europe today, and what happened in Asia today, it was tech. All right, so we got a little bit in PayPal, Intel, NVIDIA. Visa's got single prints, right? Like these little dashes, but really no liquidity this morning in Visa. Microsoft's got a little bit of activity, and so does Apple, and it's maintaining it at the moment. It's not fading it back out yet. Now we've got European Central Bank Gnidos. I'm sure I'm butchering the guy's name, but we've got a central banker talking in Europe. So we've got Bullard in the U.S. chipping his teeth, and then we've got a central banker in Europe out there throwing rocks in the water. All right, so looking at finance, also up this morning, and like we've talked about many times before, you can't have a sustained or a significant rally if you don't have one of the three sectors. You have to have one of the three, right? And the monsters of tech, the MOTs, they fit into that category. Consumer discretionary, finance, or technology, preferably all three. Then we have one of those amazing, just rip your face off rally kind of days. But you have to have at least one. The NASDAQ 100 does not have any financials in it, but the S&P and the NASDAQ both have technology in it. We can start to see some of that weakness coming through here in the financials. Bank of America is trying to close that gap from the gap up, and same with Wells Fargo. Morgan Stanley didn't get much of anything, but there's not much print there. Same with Goldman Sachs, not much of a print. And Citi working on closing that gap. So definitely seeing the weakness in finance. And yet it was the NASDAQ that had the liquidation break earlier. So just a really bifurcated market this morning. Approach with caution. When we narrow things down to this small area from the end of May going forward, we've got the linear regression line in white, and we've got a very muted, very compressed swing high and swing low through this area. You can see we're looking at Tesla here. It rolled over across that 740, and it gave us already the marker for the swing high. Now, it can break that and go up. It absolutely can. Price can do whatever it wants. So we never want to say things like, oh, well, it can't do that. Yeah, it can, but we have to also approach it with a question like, what's more likely? That it breaks the swing high and swing low and continues that move to the upside, or that it completes the swing high and swing low and begins working its way back down towards, say, the 640 area or the 600 area. Absolutely something worth considering this morning. So a breakout of the 720 area, say 723, we would have a target around the 740. And should we break below the close of yesterday, call it 700, then 690 or even perhaps 685 would not be out of line for just today, right? So the US futures market is tradable around the world, Hisar. So what I would recommend, and it's, I don't personally like the broker I'm about to recommend, but it is the one used by people around the world, because as a company, it has earned the permissions required in different nations around the world. I would recommend Ninja Trader. Ninja Trader would give you that access to the American futures market, and it's really, really, really popular from traders around the world. And I don't know if the popularity is because it's basically the only broker that has that, or if it's popular because it's a good broker. The only reason I didn't like it is because I didn't want to buy it. I wanted to use a free broker, a broker that would give me access to the market without me having to pay for the privilege of using their platform. And so I did not appreciate that. But everybody who has bought it says they love it. And that would make sense, because if you buy it, you actually get all the features that it should have. But if you only use the free version, it's limited in its features. You don't get trailing stops. You don't get all of the stops. You don't get different order flow. You don't get orders on the dome correctly. There's so many features that are not there unless you buy it. And I really found offense to a broker that wouldn't show me order flow unless I bought their product, as if they're holding it hostage. That's like telling me you're not going to give me volume unless I buy your product. Really? Volume? Come on, man. And then stops. You're going to withhold the way that I can exit and enter trades because I didn't buy your product. And so I don't use it. But I'm also in America and I've got a lot of choices. So I don't have to tolerate a company like that. But that's what I would point you in that direction. We're looking at NIO here. When we talk about IX10 and inside days and finding a compressed market, not a market hiding behind a really big candle, man, this is the one, right? This is it right there. It's exactly what it looks like. So NIO is wound up nice and tight and compressed behind the June 21st candle. Now, the longer we stay inside day or we stay IX10, the more energy we're winding up, just more and more and more and more energy. And as you can see this morning, we've broke out of that range. Of course, on these lower time frames, it actually has more of a trend to it. All right, let's get rid of that and do it another way. Bring in the linear regression line. Just you can just start left to right where you want to be, and it'll do the rest. I think that line pretty much says it all. Now we know that it, excuse me, we know that it can continue that move to the upside. Of course it can. But we got to consider the idea of will it? And what would it take for it to continue that move up, breaking this swing high, swing low pattern that it's been in? So it really would seem that we're more likely to fail here and dump back down rather than to continue this breakout this morning. But if everything maintains this bullish posture this morning, then that's exactly what we could get. So what you want to mark for your line in the sand would be yesterday's highest point, or at the very least, the one that I like to mark is yesterday's open. We are opening above yesterday's open. That's a good check mark. It also is a great pivot point, or that line in the sand, so that we can look for that pullback at the open, validate old resistance as a new support, and then make that move to the upside. $24.50 is where we're going to expect some resistance on NIO this morning. So just kind of be aware of where that is. That overhead of resistance is still there. A gap up breakout in Alibaba this morning too. On AMD, watch that open of yesterday, 84.32. I'd really like to get above it before the open, but it doesn't look like we're going to get that. So we need to clear our own Globex range. And then for any breakout to the upside, that 84.32 is going to be a significant level of resistance. If you get through that, though, the Globex high of yesterday, basically $85, get past that, and then we're up to 86, right? We start getting into 86, maybe 86.5. It's my day to stream, so I will be in the stock and options channel, 9-ish, 9:15 or so. I'll see y'all there.